Question number 105 onwards, we need to. So, S&P Private Limited Coimbatore exclusively manufactures and sells product Z, which is exempt from GST-wide notifications issued under relevant GST legislations. The company sells product Z only within Tamil Nadu and it is not registered under GST. Further, all inward supplies of the company are taxable under forward charge. So they are exempt, they are exclusively engaged in exempted goods. A person who is exclusively engaged in exempted goods is not required to get registered, and only when they start making taxable and exempted supply they need to register whenever their aggregate turnover exceeds threshold limit. And even their inward supplies are taxable under forward charge means they are not compulsorily required to get registered under 24 also. The turnover of the company in the previous year was 55 lakhs. The company expects the sales to grow by 20% in the current year owing to the growing demand of the company. So they decided to increase the production capacity and they purchased an additional machinery for manufacturing Z. On which date? On 1st July. The purchase price of the capital goods was 20 lakhs excluding GST at 18%. They would not have taken credit at that time. Why they would not have taken credit at that time? Unregistered. Na? An unregistered person cannot take credit, so they would not have taken credit at that time. However, effective from 1st November, exemption available on Z was withdrawn by the central government and GST at the rate of 12% was imposed thereon. The turnover of the company for the half year ended on 30th September was 50 lakhs. So from 1st November the exemption got withdrawn and by the time 30th September it was 50 lakhs. So definitely they are crossing the aggregate turnover because already they got 50 lakhs. Now 1 rupee of sale also, taxable sale also will lead to aggregate turnover crossing the threshold limit. So therefore from when they are liable to get registered? They are liable to get registered from 1st November. 1st November they are liable to get registered. The board of directors of S&P want to know whether they have to register under GST. First, what is their aggregate turnover? By 30th September it was 50 lakhs. And what is the applicable threshold limit to them? Where are they located? Tamil Nadu. Exclusively engaged in sale of product Z. So a person located in Tamil Nadu exclusively engaged in goods, the applicable limit is what? 40 lakhs. And in this case aggregate turnover exceed threshold limit, but till the time they are exclusively engaged in exempted supplies they are not required to get registered, but they are liable to get registered as and when they start making taxable supplies. So here the date is 1/11. Therefore they need to make application for registration within 30 days from 1/11. So normally any person is required to make application for registration within 30 days from the date they are liable to get registered, and in case of CTP, NRTP, they can make application for registration at least 5 days before commencement of business. Okay. So in this case within 30 days from 1st November they need to register. Then next, in this case, in the above question, S&P Private Limited is already registered with respect to certain taxable supplies being made by it. Along with manufacture of exempted product Z, other facts remaining the same. Can it take input tax credit on additional machinery purchased exclusively for manufacture of Z? If yes, then how much credit can be availed? So yes, they can take credit with respect to capital goods because 18(1)(d). So what does it say? Input tax credit. So whenever you are making exempted supplies and when it becomes taxable, so whatever is the capital goods that was purchased for using exempted goods, so on that capital goods we can take credit now after reducing 5% for every quarter or part thereof from the date of purchase till the date of conversion of exempted to taxable. So what is the date of purchase here? The date of purchase is 1st July. So what is the date of conversion? 1st November. So July means it comes in which quarter? Calendar quarter should be taken. So July, August, September, then October, November, December. So 2 quarters. 2 quarters means what? 10%. What is the input tax credit? 20 lakhs into 18%. 3,60,000. 3,60,000 minus 10%. 3,24,000 can be taken as credit in terms of 18.1d. Suppose if they are getting registered for the first time, then 18.1d will not be applicable, 18.1a only. They are liable to get registered and they are now only making application for registration, then that 18.1d credit on capital goods cannot be taken. 18.1a 1b says that credit is not available on capital goods when you are liable to get registered and you got registered within 30 days, that is made application for registration within 30 days, or voluntary registration. In that case, we actually cannot take the credit on capital goods, only inputs as such held in stock, inputs in WIP, inputs in FG, but not capital goods. But in case of 18.1c and 1d, what is 1c? Composition scheme to normal scheme, and when your outward supplies were exempted, it became taxable. So then in that case, not only inputs as such held in stock, inputs in WIP, inputs in FG, and even capital goods also we can take credit. But for that capital goods, we need to reduce now 5% for every quarter or part thereof from the date of purchase till the date of conversion, and all these inputs and capital goods should have been purchased within 1 year prior to the closing stock date. Okay, so like that we have the provision. So therefore here this line, if it is not given, SLP Limited is already registered with respect to certain taxable supplies being made. So had that line is not given, so definitely we cannot take credit on capital goods because the applicable section is 18.1a. So that's what I have given as a note. Okay, so if they are getting registered for the first time, they can avail ITC in terms of 18.1a but not in terms of 18.1d.